right, so costs to consider when employing staff. There's so many questions around employing people for organisations, especially in growth phases, and how you do it, what you do. So hopefully I'll show you a little bit of insight, especially when we look after so many payroll runs for organisations. So let's get started. So what is the employment status that is being offered? So there's a lot of confusion around, what are people offering? What are the types of statuses that are involved when you're doing an employment contract? Now, let me just say, just quickly, I don't look after HR, I don't look after employment contracts, but because we do the payroll, we're looking for certain things in employment contracts, because this will determine, of course, their entitlements and how payroll is processed in the accounting software. So there's three different types of employment statuses, and that is full-time, part-time, and casual. There is only three. Let's just keep it simple. So let's just go through the differences of what makes up those different types of statuses. So as you can see here, a full-time employee is a 38-hour week. A lot of the time we go to the award, the Fair Work Award, to make sure that we're covering, dotting our I's and crossing our T's to make sure that everything is considered. And it accrues annual and personal leave. And it also accrues long service leave after 5 years and paid leave after 10 years. Now you'll see that I've said accrues long service leave after 5 years, but it's only paid after 10 years. It is diligent to actually accrue after 5 years because, say, for instance, you make that employee redundant, then that actual long service leave does need to be paid out. Whereas if they're an ongoing employee, it doesn't actually get paid until after 10 years of service. Now, that is continuous service, yeah. Then part-time, it's permanent part-time, so you agree to the hours, the days, what it looks like for that person for a week, 2 weeks, a month. And of course, it accrues entitlements, but on a pro rata basis. So say, for instance, there's 20 annual days entitlements for a full-time person, and that person's only working 4 days. It only accrues pro rata, which is 16 days in a year. Same with personal leave, same thing. And then, of course, with long service leave, that is the same case. Now, the casual employee, it accrues long service leave, but it does not accrue annual and personal leave. So I just say that again, it accrues pro rata long service leave, but it does not accrue annual and personal leave. The long service leave is based on an average of, there's a couple of ways of doing that, but it's based on the averages of how much time is being worked over a number of years. The casual also, there is a casual loading on the hourly rate, which is, it tends to be about 25%. And then the only thing with the casual, they can request to convert to part-time after 12 months. Now, from experience, and of course, because we look after so many payroll runs, think of the long term of where you would like to see this employee. Because can I just say, it is actually harder to move a casual employee into part-time. And why do I say that? It's because of that 25% loading that employee gets on a casual basis. They get used to that. They get used to that weekly pay slip where that says 25% leave loading. And then to convert them into part-time, we know that they accrue leave, but they're used to receiving that 25% extra. So just consider when employing people that if you've got regular hours and days that you're going to employ these people, maybe consider permanent part-time and not casual. Casual does work for the likes of your hospitality industry, really casual employees. It might be seasonal work. So yeah, just consider the long term. And noting that superannuation is applicable to all three employment levels. So it doesn't matter whether you're full-time, part-time or casual, on your gross salary, there is super that is applicable for each of those employment statuses. I will cover employees and contractors in a minute. I'll just keep going through just the employees for the moment. So just the cost to employ. So when you're employing someone, your direct cost that you will know it as is the gross wages, which is what you pay them in the hand, plus your taxes that you need to pay to the ATO, the superannuation, commission and bonuses, entitlements, and for casuals, the casual loading on hourly rates. So they're the costs that you know when you're putting a contract together and what the cost is. The employer costs that need to be considered is the payroll tax. So of course this varies in different states, but in New South Wales it's 1.2 million, which includes your wages and your super. And we just got to consider if you've got employees in other states and there's a common director, it will be grouped. So, but again, there is a threshold there. Until you hit that threshold, it's not applicable. Workers' comp, don't forget you've got workers' comp that you must do every year. The declaration of your workers' comp is always in arrears. So if you're a new company that you would just get your base and give them an approximate of what your wages will look like, but then it's always at the anniversary that you declare what your actual wages were, and then they'll assess it on that. Other costs to consider that most companies, tend to forget about, but I'm just throwing it in here because it's one that happens organically when you employ people, and I think truly you should be thinking about these costs as well, especially when you're doing budgets. So management liability insurance, I can't stress enough that if you're employing people, you should have management liability. With Fair Work, and there's so many layers within Fair Work that I just to be able to sleep at night, I would be saying that management liability insurance is a must. The recruitment fees and adverts. So, if you've got an outsourced recruitment company, and you advertise on Seek, the likes of Seek, those fees and charges for every time you employ someone, there's those costs, and then staff training. So you might have an external company that does staff training, but also there's a lot of costs within house. So when I say within house, you might have a HR manager that does some training. You might have other team members that have staff training. And then there's recruitment costs that, if you've got a HR manager, they're also spending a lot of time in recruiting. So there is layers within that are hidden within a business that need to be considered. The other one that an expense is that people tend to forget about is your processes. So a lot of companies, when they're rostering, they use the likes of Deputy, which is a fantastic rostering system, but also it covers, the awards and understanding what you need to pay them as a minimum. There is a software cost with that as well. So yeah, your direct costs, people get them. The employer costs, these need to be considered, and especially when you're doing budgets. And as you know, when you're growing a company and you're putting extra people on, you would add these as well in your budgets. The employer compliances. So here we have a lot of areas that need to be considered with the ATO, with insurances. This is what we do on a day-to-day basis. There's a lot of it, but we like to just keep this simple for a lot of our clients and just show them, what needs to be paid and when, and try and give them as much advance notice as possible, because a lot of this just accrues, and before you know it, you get this mighty big bill that you need to pay to the ATO, and you're like, far out, where did that come from? One of the areas that we like to do to fulfill this, because as a director of a company, this is part of your commitments to a company to make sure that these are paid, otherwise it does come out of your own pocket. That I always say, try and put all this money into a separate account. So when you are actually, when it's due, that there's no surprises. So the employee PAYGW tax, that is the difference between what you pay the employee and what their gross wages are. So when we're submitting this to the ATO, it could be in the form of a monthly IAS, or it could be part of your BAS, which is your quarterly. So you can imagine if your employee taxes, it can accrue pretty quickly, even over a course of a month. So putting it into a separate account is ideal. Again, the superannuation. So as a minimum, you need to pay this quarterly on the 28th of the month after the quarter end. This is a must. There is no forgiveness for this, and there's hefty fines if you get audited. So I strongly recommend you put this money aside. And just as a reminder, it's only around the corner, 1st of July, the superannuation goes from 10% to 10.5%. So that's on the 1st of July of 22, the super does increase to 10.5%. Payroll tax, again, this is either done monthly or annually, depending on the state tax, and also depends how much you're submitting each year. Single touch payroll, of course, it's just clicked over to single touch payroll version 2. And the difference between 1 and 2 is really how much is actually being given to the ATO, which is then feeding into Services Australia. So it does break up all the different areas of that pay. So it used to just be one lump sum, and now it's broken into different allowances, just different areas of payroll. Even if there's leave entitlements that's being paid on top of your gross salary, that will be submitted as well. And then, of course, workers' comp, which I just mentioned previously. Okay, so in saying this, I just wanted to summarize quickly to ensure there are no cash flow surprises when you employ staff. So accrue the entitlements each month so it reflects in your P&L. If you don't put those entitlements into P&L, you think you're traveling fine. If you're close to the break even on your P&L, sometimes this can create the business into a loss situation. So I strongly recommend you accrue this each month. As I mentioned, pay your super maybe monthly, or transfer the expenses into a provision account. By paying the super monthly, it helps with cash flow and understanding your position in your bank account. And again, transfer your employee taxes into your provision and bank account. Then there's no surprises. Okay, and then let me just say, I hope this hasn't turned you off employing staff. Because one thing is that you need staff to grow the business and then give you more time, and the business doesn't become just you. So when I say these three things, because I've just told you a lot of compliance and onerous on the business owner and the costs. And of course, people go, I don't want to employ people. But I think you've got to look at the business holistically and understand where you want to go with this business. You really do, if you're looking to grow, give yourself more time, and your business becomes an asset if the business doesn't become just you. So these three things are really, really, really important to think about in the longer term game. Unfortunately, I don't know which way you want to look at it, but I'm going to say fortunately for us, we've about to put on 4 extra staff, and putting on 4 extra staff, there is a massive big cost to the business. But the longer term gain is that the business isn't all about me. The business is actually about the team. So, I think it comes down to just making sure your budgets are true with reflecting all those elements with what it truly costs. So you've got, your direct costs that it and that you see it on the employee contract, but then you've got your indirect costs, which actually cost the business. So if you're doing your budgets, it's really important. Now, so when you're going to employing staff, now this is not in the slides, but I wanted just to cover the difference between contractors and freelancers versus employees. So this is something that I probably get asked on a definitely monthly, maybe even weekly, and it's because, as you could see, there's a lot of onerous on employing on staff. Now, and people try to they're either trying to avoid that onerous component, or they're thinking shorter term, or they're thinking flexibility around having contractors and freelancers. Now, can I just say, in the last couple of years, the ATO is steering away from people having contractors and freelancers in their business. And the reason, the bigger picture of all of this is that from an employee side, there are some contractors and freelancers that aren't submitting to the ATO what they're earning. What those, especially when they haven't got an ABN, they're not actually disclosing all of that money that they're earning as a contractor and freelancer. But probably the most important thing here is that they're not paying super for themselves. So the longer term picture is that they're not going to have a retirement fund because, contractors and freelancers, they're just looking for them now. So from an employer perspective, I understand that you like the flexibility. So the definition between the two is that a contractor and freelancer, if their earnings are from a variety of companies, they're earning their income, they're invoicing other companies, they're using their own tools to produce the work. They don't have set hours and set days. They can actually get other team members within their organization to do the work. So they're truly a business in their own right as a contractor. So, they might employ other people within that company. They've got an ABN, they're charging GST. So that is a true contractor because they're actually a company that's doing the work. Now, if they don't have an ABN, then it is a time-framed piece of work that they're doing, or there is a fixed term for it, a 3-month term. There may be superannuation applicable to that contractor invoice. So I do have a checklist that I go through with a lot of the companies to determine whether or not super is applicable to those invoices. Most of the time, super is applicable to those invoices. So then my question is then, why are they a contractor and not an employee if we're having to pay super on those invoices? It is a case-by-case situation, and it is a thorough discussion to be had if you've got lots of freelancers and contractors in your business. I did this at the end of last year for a company that has been going for some time, and we put a line in the sand and went, right, we need to look at reviewing all of this. And of course, it came up that we went back and paid super to some of those contractors for the past years, because it was deemed that it was applicable. So I would say that feel free to ask me those questions. Again, it is a case-by-case situation, and to determine, whether or not firstly, they are a true contractor. Secondly, whether is super applicable to it. And thirdly, whether you should be reviewing the fact that they should be an employee to your business. Hopefully, I've given you some insight to today's session. Has anybody got any questions before we wrap up? We've got a couple of minutes. That is another common question. What if they're overseas? Well, overseas, if they're sending you an invoice, then you're just paying another supplier that is actually overseas. There's no GST applicable, yeah. So yes, as long as you get the paperwork, then that's no problem. Another question has come in. Do you have any experience with paying employees based in New Zealand? That is another good question, because I think during COVID, a lot of the companies are now expanding to New Zealand for their resource, because we've been so short of resources over here. I do have a team member that it actually has a lot of experience with dealing with New Zealand and New Zealand companies, and liaising with HR managers, ensuring that New Zealand is covered correctly. So I personally don't have experience with New Zealand, but I do have a senior team member that works with companies that are dealing with New Zealand. Okay, so there's a question: if they have an account here in Australia and they're an overseas contractor. Now, if you're an overseas contractor, then why do you have an account in Australia? That to me, that I would be questioning that. And the reason, yeah, so there's got to be from a tax perspective. Okay, so the ATO would be saying then they're earning income and they've got an account here, so at some point they need to move that money offshore. So that goes into a different kettle of fish, because that is a tax issue, and it's a greater issue, not just from an employee perspective, because it's moving money overseas. That I would direct them to the accountant on that part. Yes, employing people overseas, dealing with overseas suppliers. I suggest, and I'm happy to do this, reach out to me directly, and I'm happy to take this offline, because it's not a straightforward answer. There is lots of grays within employing people. There is so many different scenarios, and of course, in the last couple of years, it's created a lot more scenarios, because people used to live here and they've gone home for a temporary period. So and also, we do have a lot of especially between Australia and New Zealand, there's different ways of setting up businesses and setting up employees and all the rest of it. So absolutely feel free to reach out directly and speak to me, because it isn't straightforward. Anyway, I'm going to wrap this up because it is time. I hope that you got some insight into just employing people. It shouldn't put you off. Think of the greater picture for your organisation. People are the greatest asset in your business. It's not, I say machines are robots. There's a human element to all businesses. So I hope you got some good insight. I'm taking a bit of a break next month. So our session 4 out of our 6-part session, we're back on the 19th of July to share the differences between a profit and loss report and a balance sheet. Now, can I just say that sounds super boring to most people, but I'm going to express it in lay terms, because these are key things as a business owner or even a manager in some organization. It's really insightful to understand, because a lot of people blend the two together and then they get really confused. So let me share that with you on the 19th of July. Thanks for joining us today, and I hope you got a lot out of it. Feel free to reach out directly if you have any further questions. Thanks, guys. Thanks for joining.